eventually. All right, here we are. Steve G, Mid-South Financial Group. Guys, this is going to be uh, one of my first interviews of many, hopefully, to come. And a little backstory on Steve Wilson. Steve Wilson's been in the insurance industry. How long, Steve? How long have you been doing this?
Started in March of 1998, 26 years now.
26 years. March of 1998. All right. And then, Steve, I want to talk about um, you know, what were you doing? Let's go back and talk about what you were doing prior to getting into the insurance industry. And then I want to talk about what attracted you to the insurance industry, talk about your long-term care insurance career, and then we're going to get into what you're doing now. So tell us a little bit about yourself, a little backstory, and we'll go from there.
Well, my background had nothing to do with financial services or insurance industry at all. Initially, my wife and I both were young when we got married in our 20, or actually 20 years old. And I was working basically as a machinist. I was working what they call the graveyard shift, 11 to 7 every evening at a manufacturing facility here in East Tennessee. And how it came about, my wife actually answered an ad in the paper, a lady looking for someone to set appointments, long-term care insurance appointments for her. And she answered that ad. And my wife worked for this lady for a little over 2.5 years, setting appointments, taking care of all of her marketing work and her paperwork. And that's how I got introduced to the industry. But I was basically blue collar, 100% blue collar. That's what I
Wait,
did.
so your wife was doing appointments first? Janice was doing appointments?
She was making appointments. She was taking leads and setting appointments for Rosemary, and did that for, like I said, almost a little over 2.5 years.
Okay.
And the funny story of that was my wife was Rosemary then took a corporate job with General Electric at the time, GE Capital, and going to become a national trainer. And she asked my wife if she would be interested in becoming an agent and becoming a long-term care specialist and selling long-term care insurance. And my wife, of course, had no interest in that. We had 2 small children. She didn't want to get into that. So I told my wife, I said, I'd love to do that. I'd like to try that. And, there's nothing like having a vote of confidence. And my wife said, you can't do that. So that's how it all got started. And, she, from that point on, she did introduce me to, of course, I knew Rosemary and talked to Rosemary about I'd like to try. And that's how I was introduced to the industry.
Okay, so she recruited you, GE Capital, which then became Genworth, right? Financial.
Worth Financial, yes.
You started working with her, and then, did you excel right away? Did you come out swinging? You were a top producer. Did it take you a while to figure out how to sell it? Tell us a little bit about that.
Well, the one thing that I had a huge advantage on was having someone that knew how to work and use the phone.
Yep.
That was my wife. So in her background, she had been in collections through college and through working through school. And she had been in collections, so she had thick skin. She could handle rejection on the phone, and she could overcome those things. That was a real advantage to me, to where the helps where she was able to set appointments and things. But no, I didn't come out swinging. I went. I'll never forget. I went to Brentwood, Tennessee, down in Nashville for training last week of February of '98, and came out, and this just sort of ties a little bit to my faith, I guess. But we came out of training, and if you're competitive, if you're going to be in sales, you need to be competitive.
Yep.
We came out of training with about 8 other agents, and first week out, we didn't sell anything. Second week, I made my first sale for $662, first premium I ever sold, and
that was an annual premium?
That was an annual premium.
An annual premium.
$2.
All right.
Oh, long story short, after about 6 weeks, I had not sold anything with that one policy, and I couldn't give a policy away. And I was still working third shift. I was doing this. I'd go home and I'd sleep about 3.5 hours, and then I would have appointments from 1 o'clock, 4 o'clock, and 7 o'clock. Then I'd come home, change clothes, grab something to eat, and go back to work. So I was still working the night shift while I was sleeping 3.5 hours in the mornings, and then I was going and doing this. I did that from March till June the 13th of 1998, when I finally was able to just do this full time. But anyways, we got out of training. 6 weeks later, we had our first regional meeting. and down in Lakeland near Atlanta. And I go in there, and all these other people have sold stuff that I'm in training with, have sold stuff, and here I'm just embarrassed. I've sold $600, and all these other people are being recognized. And I tell you what happened in this. So I give all the credit to the Lord for really helping me and blessing me. And I'm sitting in church one Sunday morning, and I'm very competitive. And I'm not going to be beat around the bush. I was down and out, depressed, I guess.
Yeah.
And the biggest thing I was looking to do, it wasn't I was trying to get something to get rich quick. I was wanting to get off third shift. I'd always wanted to be in sales, but I wanted to get off third shift to be able to feel good, be with my family. Well, and I just started, it was like I was praying to myself, and it was just like something spoke to me, said, why don't you dedicate this to me? And I thought, I hadn't prayed about this. I hadn't done anything about this. And I did. That's exactly what I did, Cullen. I just committed. I said, I'm not doing this to get rich, and I'll always give the Lord the glory and the praise for it. Well, to answer your question, that was around June or, sometime in May. And I'm not one of these get rich, pie in the sky guys. But from that point on, I ended up being the number one new agent out of 1,500 career force agents with GE Capital that year, become the national. And I'm not saying that bragging, but it just, the next week I sold almost $10,000 worth of premium. And
What year was this?
That was in May. That happened in May of 98.
Of 98. That's incredible.
Yeah. Wow. And then from that point forward, I ended up qualifying for their Leading Producers Conference on my own in 6 months on my own money, not being awarded. And it just started clicking. And then and like I said, I give all the credit to the Lord because I proved I couldn't do it. So I just and so I've always made sure that I give the credit where it's due. But and from that, you do learn a lot. You learn a lot in this business. And I think the biggest lesson I learned early on is my fear. You have to overcome yourself so much. And my fear was I didn't want to be considered some greasy, slimy salesperson stereotype, that so many people stereotype you as. But so that really, in my mind, I look back now, that probably held me back because I didn't come from money. We came from, we wasn't wealthy people or rich people in my family. So, I was sort of intimidated, with money and talking money and things. And so my own belief system held me back in a lot of ways, from being able to do some things I should have done very early on. But, you learn and you grow, and that's the most important thing. If you're willing to learn and listen, you can do really great things in this business or any business for that matter.
So let me ask a little bit about, you must have had a good mentor or somebody that trained you really well. You talked about, Janice, being really good on the telephone. How did you went from zero to hero like instantaneously. Did you have some good mentorship? Was it just good sales training, good coaching? I know you just gave it to the Lord and it just all came natural. It's an incredible story, but I'm just curious as to how you grew so quickly.
When I first started in the business, I started researching, trying to figure out, what to do, where to go. And of course, Rosemary, I talked to her a lot. But a gentleman named Harry Crosby down in Columbia, South Carolina. And Harry was a real mentor to me. And then you had Stuart Bruno, who was the regional sales manager for GE Capital at the time and out of Nashville. But Harry was the first long-term care specialist to ever place over $500,000 of long-term care premium.
And what year was this? Do you know?
I think he did that in 1996.
Oh, that's incredible. Yeah.
So he had written a book. He had written a book on long-term care and long-term care insurance. Yeah. And I called him, and his wife, he was out on an appointment. I talked to his wife, Wanda. I ordered the book. I thought, if you're going to talk to somebody, why not talk to the number one person?
Yeah.
And so Harry and I I read his book. I studied his book. And what happened was, Cullen, from that, when I started reading his book, I would every day read that book. I'd read something. If I went on 3 appointments and I came home and I hadn't sold anything, I would go to that book and start reading.
Okay.
And 'cause I knew I had missed something. I'd got out of the process because if you have your training system should be processed where it can be duplicatable. I should be able to come in halfway through the interview, your interview, and pick up right where you're at if you're training people. And that's the way the system was. And so Harry, I leaned it on him really heavy. So what happened was I'm sitting in New Orleans that year. They had the National Career Agent Conference in August in New Orleans. And Cullen, I'm sitting on the very back row of of the I mean, there's 1,600 agents this place.
Yeah.
And I'm
Yeah.
very back row. And they have what they call the President's Club or the President's Council up on the stage. Of course, Harry Crosby's up there. I've never spoken to Harry. I've talked to his wife. I've read his book over and over. So I'm listening to Harry Crosby, Georgia, and all these big name people that's in the industry. And they're all telling what they do. And here's when it hit me that I could do this. I'm sitting there listening to them talk, and every answer they give, my response to myself was, I do that. Everything they said, and I would say, I do that. I do that. And that sounds sort of childish, maybe, but what I recognized that coming out of that, the only difference between myself and them, they did it more.
Mm-hmm.
That was the only difference. I did exactly what they did. They were just doing it more than I was. So as soon as that session was over, I walked up to the front of the place, introduced myself to Harry, and he and I became great friends from that day forward, and been on a lot of trips, done a lot of things together over the years. And he, his wife had told me about me, but that was the big, just a aha moment for me when I understood, hey, the top producers are not doing anything different than I'm doing. They're just doing a heck of a lot more of it.
Yeah. Yeah.
It's really that simple in the grand scheme of things.
I mean, you don't need to reinvent the wheel, right? You just need to mirror what the successful people are doing, and away you go. It sounds like. I mean, I wanna fast forward. So, you were a top rookie sales guy. How long were you in sales until you opened up your agency or became a general agent with GE Capital? Was it GE Capital or Genworth when?
It was Genworth when I became a general agent in 2000 and I guess it was around 2008 when I became a general agent with Genworth.
So look, about 10 years of sales before you had an agency.
Right.
And then throughout that 10 years, were you always a top producer? I mean, how did you do amongst, that's a ton of competition, 1,500 career agents. I mean, how are you ranking along the way? What made Genworth, well, I guess I know why Genworth wanted you, but explain that a little bit. Explain the process of going from sales to, them reaching out, offering you an agency, and then let's talk about your agency a little bit as well when you were with Genworth.
Well, as far as the agent, I was an agent for several years. I was 7 or 8 years total, I guess, full-time agent. I was, I guess when you look back, probably the thing I'm most proud of was I was in the top 10. My first full year in the business, I was able to qualify for president. Well, no, I have to take it back. I was 11th out of the nation. You had to be in the top 10 at that time to be in President's Club. So my second full year in the business, I was able to qualify for the President's Club, and I was in the President's Club 2 years there. But and I say that not making braggadocious, but just for the fact that I'm in a rural area like East Tennessee, competing against the New York cities and San Francisco's and everything else. To say I'm proud of that, I'm not going to hide from it. I am proud of it.
You should.
But we worked a lot, drove a lot of miles, worked a lot of days and hours. But we made a lot of difference in people's lives, a lot of families' lives over the years now. When you start to see what you've done for people, and but we built that. And then we did do a few things on our own. My wife and I had some agents things outside of Genworth that was through her, and sort of building a business on the other side. But then when Genworth decided to go to the career or retail agent type GA type format, that's when they reached out to me and see if I'd have an interest. And at first I didn't have no interest. I had no interest in it. I just wanted to be sort of responsible myself and a few people. But then as it come along, a good friend of mine, Charlie Clacy, I can say Charlie Clacy is the one that really spearheaded that and made a huge impact in my life by recommended I do it and helped me see the light on what the opportunity was. And I tell you, that's been
Charlie out of Texas, right?
Charlie he's out of Dallas, Texas, Frisco.
Yep.
But I'm gonna tell you that what really helped me though was when you start working with agents and recruiting agents, and because this business has really been good to me. This business has been very good to myself, my family, my wife. So, it's nice to be able to see what this business can do for a person. And when you recruit somebody and you see their background, where they've come from, and you start seeing what this business does for them, that's rewarding. It's not just a financial reward, but it's rewarding to see someone grow, how they can grow, their self-confidence and just their own belief systems, and just see them grow in themselves. That's very rewarding for me. I mean, very rewarding.
And you had no problem recruiting, just a blue collar guy, somebody with a high school education. You weren't going after the Ivy League, people with the fancy college degrees. You were just looking for somebody. I mean, tell me a little bit about what you were looking for, as far as an agent's concerned. I know that reward is tremendous when you
Yeah.
get somebody succeed, but tell me a little bit about that. I mean, did you have particular criteria, or, you know, what would you look for, and how did you recruit your agents? Now we're in what, 010, 011. You've got your agency up and running.
Yeah.
Talk to me a little bit about that.
I tell you what I look for, and it's hard to find. This color. It's very hard to find, because who you think will be great, you know, you know. But what I look for is just somebody who really is hungry.
Yep.
I look for somebody that they're hungry, they're coachable. That's the big. I mean, if they're hungry and they're coachable, we can teach them a lot of the right things and make them do the right things. But they've got to be coachable. I mean, that's the biggest thing. They've got to be willing to be coached. They got to be willing to. They're hungry, and I've got a couple agents. I mean, I nicknamed one Steve Barrett down in Memphis. I nicknamed him the Sponge,
Yes.
because I mean it was just amazing. I would sit in on calls that they wouldn't know I was on, and he'd be talking or leading those calls, and it would just. And I'm not saying this again being arrogant. It was just like it was. I was listening to my recording of myself, and so it's there's no to me. I used to think, and this is no disrespect to military. I used to think military would be great retirees, or would be great recruits.
Yeah.
Well, I recruited, but it didn't work. And it's I thought because of the discipline and all the things that went with it. But the
Sure.
problem was they're used to being told every step to make. When whereas in our practice, you have to be a little bit independent. You got to be an entrepreneur. You got to be, because we don't have an office where you're somebody standing right over top of you. A lot of them work out of their homes,
Yeah.
and so it's a different system. Every system's different. But for me, I didn't really care about their background. I wasn't. Like I said, I wasn't looking for the Ivy League. If I got an Ivy Leaguer, that's fine. But I was looking for somebody that truly wanted to make a difference, not sell a product, wanted to make a difference, and wanted to learn.
Yeah.
Just really wanted to make a difference. That's the biggest thing.
Well, and I say in this business, which is awesome, I call it the great equalizer, right?
Yeah.
You don't have to come from a rich family. You don't have to graduate from Harvard.
No.
I mean, I remember going to a Genworth convention, and I forget the guy's name, but he was a top producer, and he says, "Look, I got a big advantage." He's like, "I made it through all 4 years of high school." I can't remember who it was. He was an East Coast guy. But I mean, it truly is. As long as you're willing to work really hard and you can be coached, I mean, the opportunity is tremendous, right? Now, let's talk a little bit about the barrier to entry. So, I mean, it's not like you can just walk right in off the streets and say, "Hey, hire me now. I can start selling insurance." So let's talk about that. What it takes to have the opportunity to come to work for somebody like yourself,
Well,
as far as
yeah,
requirements, right?
the biggest thing, of course, you have to get all your insurance license. You have to have a life health license, things like that. Which we help people through those processes if they're neophytes. To where they've never sold and they don't have a license now. We don't offer any of the security, so we're not looking for securities license, things like that. Basically, life health is what we're looking for.
So
Because
basically, so what you're saying is they have to go, they have to study, they have to take the insurance exam. Let's say they're based in Tennessee, and it's going to be an exam on life insurance as well as health insurance, correct? Both of
yeah,
those.
we'll get them set up where they can either do it online. They'll do a 2 or 3 day or in-person class training,
Okay.
and then or they can do the training online. Then they have to sit for the life and the health. Most people do it at the same time, but it is, of course, then every year as you know, Cullen, you do the CE and all the stuff that goes with it. But that's the thing you have to work with us. You have to have a life and health, and I recommend most people sit in a class 2 or 3 days, because the instructor gets into a lot of things that is on the exam to tells people, hey, here's what you might mark this, because this will be on the exam. They really do help you on what to study for and what to know. Okay. And but that's what you have to have.
So basically, I mean, if somebody is really dedicated, they're coming in off the street, they're like, hey, I want to do this. You sign up for a class, you're sitting in a classroom maybe 3 days. I mean, how quickly from start to finish? They're studying, they're working really hard. Would you say, a couple of weeks they could get through all this? I mean, or
they're going to have to, yeah, they can do it in a couple of weeks, but they're going to have to push it. And because the other thing is you got to schedule it around when the classes are being offered. So it's not like it's every weekend in our area, but they can do it online. But most of the time because I do recommend, if you do the class, like say, a Wednesday, Thursday, Friday, I do recommend someone take the test the following week. Don't wait 6 weeks to take the test. Take it while it's still fresh.
Yeah.
But most of the time, you're looking at a 4 to 6 week period there to get all that done. And then we have to go through the process of getting you appointed with different carriers. Then you have to get appointed with the different insurance carriers, the products you want to focus on. And because that's what we really look for. We're looking for people that, hey, we're not looking for a generalist. We're not looking for we're looking for people that want to specialize in the senior market. We're not looking for people that's looking to do property and casualty, that's looking to do group health. We're focused on the senior market. And so we ask a lot of questions about, where's your natural base? Do you have a natural base that you can market to? And we don't drive people crazy, things like that, but we will send a letter, let them know, hey, Cullen's coming to work with Mid-South Financial. We're excited the opportunity to, that he has with our program. If you'd like to learn more about whether it be Medicare, whether it be retirement income or long-term care protection, please reach out to Cullen. We'll do a soft letter to introduce him to his client or his database of people. So, but that's what, I mean, here's the thing that's challenging.
That's extremely helpful for somebody new, right? You're helping them get off the ground. Now you're helping to bring in clients. So at this point, you're helping them through the sales process too. I mean, correct? I mean, you're kind of holding their hand, you're bringing them along. Are you helping them close deals, out of the gate, or is it just, hey, here you go, here's the training, away you go?
No, we would work with them. We'll help them, especially if I hear local, they'll work with me. I'll work with them personally. If they're in other areas where we have agents, then other agents will be with
You're
them.
actually brick and mortar, right? In Johnson City. Yeah,
that's correct. Yeah. So we'll have them, work with us there and bring them in. But the other thing I think about when you're thinking about sales and new agents and things, the biggest challenge to overcome, one of the biggest challenges, is getting agents to understand talking's not selling. You'll hear people say, "Oh my gosh, Cullen, boy, he can talk to a tree. He can talk to anybody." Well, that doesn't mean somebody's going to be a good salesperson just because they can talk. And that's the most people's idea of a salesperson is a talker. But to me, the greatest salespeople are two things. They're the greatest artists. They can paint pictures, and they're the best listeners.
Yeah.
Because if you can hear what a person's concerns and needs are, you can find a solution, help them with a solution. You don't have to sell a product, you're selling a solution. And that's what we really drive home to our agents is we're not selling a long-term care insurance policy, we're selling a need. We're selling a solution to a concern or a need. When somebody's concerned about running out of money, we help them get a pension or retirement income, something to give them a guarantee that they'll never outlive. Yeah. So it's what we're doing is really trying to make a difference, not just because so many people in their mind I'm going to sell insurance, I'm going to sell this. No, you're not selling insurance. You're selling a solution. You're helping people with a need. Yeah. And that's when you realize you're doing something for people instead of something to people, it's a completely different game. It's a completely different game.
well, they have a problem, right? And you have the
That's right.
solution, which, and then the other thing, the good Lord gave us two ears and one mouth, right? We should
That's
listen
right.
as much as we talk. The one thing that I think with agents that haven't, that, when they're new and they're starting out, is they're so up in their head and they're worried
Yeah.
about what they're going to say next that they're not sitting there and listening to what the client has to say. And I
Right.
think it's, common when you're new in the industry, probably any sales industry, to where you really got to sit down, listen to what that client has to say, and then be comfortable with what you're going to say next because you've actually learned what you're selling, I guess, if that helps at all. Or
One of the things I learned early on, and that's about painting pictures, but it's about asking questions. Because if you'll ask, they'll tell you. You can ask them. They'll sell. Basically, it's a bad way of putting it, but they will sell themselves if you'll ask the questions. And so, if a person will, especially if you're not a great listener, if a person will force themselves to ask a question that is a result of the previous answer, that will force you to be present and hear everything they say. So any answer, when you ask a question and they give you an answer, if you will ask another question that's tied to that answer, that forces you, instead of like you're saying, just having it in your head, because what you'll do, you'll ask a question that doesn't even relate to what they said. They're sitting there thinking, well, crap, Cullen didn't hear a word I just said.
yeah, yeah,
But if you make it about them and ask the questions as a result of their answers, it's all about them. And that's what people want. They want people that's concerned about their needs and concerns. And because here at the end of the day, you'll have people, I've had people say this to me, well, Steve, I don't need any life insurance. But what they've described to me, what they need and what they want to accomplish, a life insurance policy does everything, it checks every box. So, but in their mind, they don't need life insurance. But once they've answered the questions and you've mentioned the product, they may say, well, Cullen, we don't need life insurance. But the end of the day is this: what does it matter what it's called if it does what you need it to do?
yeah, right.
See, that's what happens. People get a perception, whether it's a product, whether it's a life insurance policy, annuity, or Medicare Advantage or Medicare stuff. They think, well, I don't need that. But if it does everything you need,
Yeah.
maybe you do need,
Oh,
because
yeah.
it's a perception.
Yeah, it's like they hear the word annuity. Oh, I don't like annuities. Well,
Exactly.
how about having guaranteed lifetime income for the rest of your life? Oh, well, I really like that,
I
right?
like that. Nobody will ever say they don't like that. But
Yeah,
it's because whether it's Fisher Investments, whether it's whoever it is, they
sure.
just don't like. And there's been times that annuities have been abused, but which all products, doctor. I mean, here's the thing: as long as we're in this world, you're
Yep.
going to have 5 to 10% of every profession that's bad. I
Yep.
don't care. It's the insurance, police department, hospitals. I mean, you go down the list. It's always going to be that way. But we don't have to be like that 5%. We can differentiate ourselves. And that's what we want to make sure we do. We just want to
So,
be.
so Steve, real quick, I want to go back to now you're running your agency, your Genworth Financial. You have a long-term care insurance agency. And how many agencies across the United States at this time? So we're talking what? We're in 012 now, 011, 010 in that area?
Yeah, I'm trying to remember how many different offices there was with Jim Worth.
35, right? Something like that across the country,
There,
32.
there, there may have been. There's probably more. There's probably double digits. There's 12, probably 12 to 15, maybe
Oh,
12 to 15, like that. Because they did condense it down after that a little bit more, but there was 12 to 15 probably at the time.
okay. And then let's talk about that a little bit because now you've taken over, just kind of going through the stages in your career. So now you're running an agency, you're in the Midwest territory, so you're competing against the New York, the guys on the East Coast, you're competing against the guys in Los Angeles, San Francisco, right? Where was your territory?
Where's the Southeast? We had like Tennessee, Georgia, Alabama. Basically, is what we had. We had those 3 states.
And then let's talk about that a little bit. I mean, how many agents did you have? How did you do? Were you a top agency? I mean, how did you rank amongst the
Yeah,
top?
production wise, total number wise, we were all because they would rate you different, on your growth versus new agent production, a lot of different things. And Cullen, when you say you're a $3 or $4 or $5 million agency versus agency that's $500,000, 10% growth is a big deal. So if we had to grow by 10%, we had to grow by 300,000 or 350,000, whereas an agency over here might have to grow by 50,000.
Oh, I
But
see.
that's how you got judged sometimes.
Yeah.
But we were always, as far as production, we were always one of the top 2 or 3 ourselves, New York and You had Gold Coast out there. You're familiar with those guys, and you had several really, really good agencies around the country. I mean, my gosh, when you look at long-term care, I mean, GE / Genworth, I mean, their combined book of business is larger than the top 5 competitors
Wow.
combined.
Yeah.
It's enormous how large their book of business is. But they we had, I'm trying to remember now, I have to go back and look at the books, but we at one time we probably had 75 or 80 full time what we call agents specializing strictly in long term care insurance.
Mhm.
And when I say back then, you had to do contract minimums. We had minimums that you had to produce, or you didn't hang around very long. And those we had a lot of really good agents, good people.
Yeah. And I can remember actually when you and I met, I think it was either 011 or 012, the Gaylord Hotel in Dallas and Convention Center, right?
Yeah.
And Genworth's annual convention. And for people listening, they had breakout training rooms, and I got to sit in your training, and it just blew me away. I mean, this was quite a long time ago as a young man, but I left there and I was just like, wow, this is incredible stuff. It was really tremendous. And honestly, I think it helped me become a better sales guy too, as well. I want to shift gears a little bit, and talk a little bit about the evolution. I realize, let's talk about the evolution of long-term care insurance. A lot of people may not know this, but explain that Genworth closed down their retail division. Walk me through sort of, there's been a lot of changes, right? Since GE Capital started, the products and the shifts, and then kind of how you evolved and where you are now with your business.
Yeah, well, when you look at long term care industry as a whole, I mean, in 1974 when it first started, Fireman's Fund, and then they were bought out by a company called Jefferson Pilot. And then Jefferson Pilot was bought out by American Express, and American Express was bought out by GE Capital, and GE Capital became Genworth. That's how this whole thing, far as the original, long-term care insurance started. Of course, then you had a lot of other companies. So when I started in 1998, there was, I believe, it was 123 carriers selling long-term care, individual, traditional long-term care insurance. 123.
Wow.
Today, there's less than 10 selling traditional. You have the Northwestern Mutual, you got New York Life, as far as the captive companies, then you've got Thrivent, you've got Mutual of Omaha, National Guardian, pretty much is for traditional. There's very limited on what you can do on the traditional. But where the market has really evolved over the last 10 to 15 years has been to the asset-based product. Mm-hmm. Whereas a traditional long-term care policy, they're very rich in benefits. And the policies that we sold up till 2012, that have seen a lot of rate increases and a lot of the negative press on, those products are unbelievably rich in benefits. I mean, just incredibly rich. And so what has happened since then, the pricing has changed, so it's not nearly as inexpensive, I guess you would say, as it was. But what people are looking for now, most of the time, is these asset-based products, whereas a traditional long-term care, if you never use it, you lose it. It's sort of like a homeowner. If your home never burns down, you've paid all this insurance for nothing. You never have a car wreck. It's protection, and there's nothing wrong with that. You hope you never use it.
So you mean I don't get to call up my car insurance company and say, "Hey, I've been with you guys for 30 years. Had an automobile accident. Can I get my premiums back?"
You don't get no refund.
No, they
That's
don't get
the same way with the traditional long-term care. But with these new asset-based, where it's really gone to in the last few years is these asset-based, where the premiums are guaranteed. You've got it pays just like a long-term care policy, but if you never use it, most of them are second to die for couples. And when they pass away, your heirs or beneficiaries get a 100% tax-free death benefit. So everything they've paid in, and then some usually, is going to be the estate. So what I tell everybody, basically the estate is going to be made whole. It's either through long-term care benefits or a death benefit. The estate is going to be made whole, and most times, like I said, have a little bit of extra. So those are really popular now. And the other reason they're really popular now, Cullen, is a lot of these products will allow you to hire anyone. They're a cash benefit. There's no reimbursement, so you can hire your children, anybody. Because what I learned a long time ago, it's one thing to be selling something, but when you start getting claims, you really understand how the game works.
And it
The,
changes
I mean,
everything, right? As soon as
that,
you're with
that
claims.
changes everything.
Yep.
That claims change it all. And so everybody will tell you, oh, I don't want my children to do this. I don't want my children to do that, because they're sitting there talking to you at 62 years old, and they got their grandkids. They don't want. So, but what happens is, fast forward 25 years, now they're 77 years old, or now they're 82 years old, or 87 years old. So what happens is, who do you think they want there taking care of them?
Oh yeah, they're kids.
They want their kids, because they never saw. So, what I love about these new asset-based products is the cash benefit. I mean, it's nice that you don't have to worry about it. Reimbursements, you don't have to worry about whether you're hiring a neighbor, or whether you got an agency or whatever. It's just you got the cash to do what you want to.
And to talk about when you're dealing with claims, right? When it's a reimbursement type of policy, so you're not talking a cash in hand product. So all the old traditional LTC policies, you'd have to have qualified expenses in order to get reimbursed, right? So for example, if I wanted to say, take care of my mom, they're not going to pay me because I'm not a qualified expense. Is that correct?
That's correct.
Okay. And then, so the other thing too, with the traditional LTC policies, I mean, you're buying a pool of benefits, right? A total benefit pool on a traditional type of LTC policy.
That's correct.
Okay. So, and that's similar to like a linked benefit product. You're getting a total benefit pool, correct?
That's correct.
So it's really sort of the same type of deal. The only difference is you've got the built-in guarantees plus this lump sum of money, or this benefit pool is going to pay out to somebody.
That's exactly. So
it's not the you don't use it, you lose it scenario that you're referring to.
So basically, the way an asset-based product works. Let's just say, for example, you've got a death benefit. Is what you have an initial specified death benefit amount. So let's just say it's $200,000. The death benefit's $200,000. Then you have an extended benefit rider, which is another 4-year benefit. So that 200,000 may pay out for 26 months or something, 2 years. Well, what happens is, if one of you or your spouse, or just if it's a single person, they have a policy, they need care. All the insurance company does is accelerate the death benefit. That $200,000 death benefit now has been converted to a long-term care benefit. So it's no longer a death benefit. Now it's a long-term care benefit. And that $200,000 is what pays out first. So if you spend the first $200,000, there's no death benefit left, but it's gone. But then you're into the long-term care benefit, right?
Yeah. So that makes a lot of sense. So let's take that same example, and let's say that you had a $200,000 benefit pool here in a linked benefit product. Okay. And let's say you had a $200,000 benefit pool here in a traditional LTC product. Right. Now, let's just say, for the sake of conversation, somebody goes on claim, right? And they spend 100,000 and they pass away here. Okay. On this side. Now, same situation, right? They spend 100,000, they pass away here. What happens? There's a $200,000 benefit pool here on the linked benefit. There's a $200,000 benefit pool here on the traditional. What happens in those two scenarios?
It depends on what the death benefit was. So if the death benefit, let's say the death benefit's $150,000, and they spend.
Let's say it's 200,000. Let's say it's 200,000, and it's 200,000 over here.
All right. If the death benefit's 200,000 and they spend 100,000 up for long-term care, there's still $100,000 death benefit for the heirs.
So basically, there was a dollar for dollar offset. They used 100,000. There's still 100,000 left. And then boom. So on the traditional side, they had a $200,000 total benefit pool. They spend 100,000. They pass away. What happens over here on this side?
On the long-term care side, traditional. If they got 200,000, they spend 100. That's the end of it.
That's it. So this is like what you're saying. Over here, it's not you don't use it, or over here, it's you don't use it, you lose it. Over here, somebody's walking away and they're being made whole, like you had mentioned earlier.
That's correct.
Yeah, that's incredible. That's awesome. That's a great evolution. And then, just briefly, I don't want to spend too much time on this, but when you said rich in benefits in the past, I'm assuming you're referring to they were selling traditional policies with unlimited benefits, right? Open look, the insurance company, they're like, oh yeah, no one's going to use this. They're not going to be on a claim too terribly long. Just touch briefly on that. I don't want to spend too much time on that because I want to move forward with
the big thing. Everybody back then sold 5% compound inflation.
Yep.
Very, very reasonably priced. So your benefits double every 15 years. The other thing that was included, like with old Genworth or GE policies, was you had no claims offset. So if somebody's on claim and they have, say they have a $500,000 pool of money, and that it's going to grow by 5% every year. Well, the first year on claim, let's say they spend 50,000, so there's 450,000 left in their bucket of money. Well, if they've got a Genworth does not add 5% to 450, they add 5% of interest to the 500,000 like they never used. So back in the day, we'd sell these shared policies. A 10-year shared policy with 5% compound inflation was guaranteed to pay out over 14 years if you use the full amount every day.
Wow.
Guaranteed. I mean, the benefits were just, and then you had the survivorship and you had all these benefits. But the biggest thing was they priced that lapse rate, expected over 5% of people to lapse the policies, and less than 1% ever did. So that's why you've seen, and the interest rates the same way. So that's where the trouble, but those policies are so rich in benefits, whether it's the survivorship, the first day home care, those are the things that just, I mean, it's unbelievable how good those products are.
So even that these older products, there's been big rate increases, right?
Yes.
And the clients, they'll call you up, they're upset or whatever. Oh, we've had a big rate increase. They'll give you an option, say, okay, we're going to cut your benefits. We're going to cut your benefits down. We're going to keep your premium the same. But even in that scenario, since the benefits were so rich, if they were to try to compete on the market today, they're still in good shape, right?
Oh gosh, I tell you, I have people come in all the time. I had a lady here, it's been a year or so ago, and we have, a lot of rate increases and things we're dealing with. But we had a lady in here a while back, and it was sort of comical because she was upset. And she had a right to be. Her rates went up 70% or whatever. And I get it. I mean, I totally get it. I mean, mine's going up. My mom and dad's going up. It's not like I'm sitting here thinking. But so she's frustrated and aggravated, and her premiums were going from 20 something hundred over a 2-3 year period to $4,000 or whatever it was.
Yeah.
So I just showed her if I ran her plan. Now she had unlimited. She had 5% compound inflation and unlimited. I showed her if we went to Mutual of Omaha today, the maximum I could get her was 500,000. I can't get her unlimited.
Yeah.
And then I showed her National Guardian, who I could still get some unlimited on. Yeah. Well, her premium was going to be $400 some, but I showed her $4,000 in 2 years. But I showed her if I wrote her at her age she was when she bought it.
Oh, wow.
Which was 17 years ago. I told her, I said, if you walk in my office today at 57 years old and said, here's what I want 90 some $100 a month in benefits. I want first day home care. I want my children to be able to take, or my independent caregivers to take care of me. I know my family can't. Blah, blah. I went through all the things that she had, and I want unlimited benefits. Her premium would have been with 5% compound inflation with National Guardian would have been almost $28,000. She looked at me and laughed. She said, I guess I just need to shut up, don't I?
Yeah.
But I mean, I get the frustration, but when you compare it to what it is today, because the pricing is so different now, the pricing is completely different. The other big change in what's happened in the market, Cullen, is the gender-based pricing. Back when we were selling boatloads of traditional long-term care prior to 2015, you didn't have, it wasn't gender-based. Yeah. It was male, female, same age, same price. There was no difference. Mm-hmm. But see what has happened now that these companies are looking at real data instead of assumptions. 71 cents of every dollar paid in long-term care claims is female. So that's why you'll see long-term care premiums much higher for a female. You'll see the same thing on the life side. Men don't live as long, so they pay a higher premium for life insurance. It's the same game. Yeah. 50% of all claims are now Alzheimer's or some form of dementia.
Yeah.
Well, 1974, when they priced all these products, you never heard of Alzheimer's. You just heard of senility. You didn't hear of Alzheimer's. You didn't hear of all these things. Yeah. Now we've changed so much, and so now these insurance, not to defend them, but they've had to play catch up, and that's why you see the evolution of this thing.
So basically now, I mean, females are paying a premium for long-term care.
They'll pay anywhere from 30 to 70% more premium based on the age, and if they're married, things like that, than a male of the same age.
But if they go to the life insurance side, right, cheaper. It's less expensive.
Less expensive.
Yeah. So, I mean, there's a couple of carriers out there where you can still add a long-term care rider or chronic illness rider on the female side, and they're still getting the female rates, right? Which is kind of a neat little
That's a neat little loophole that you take advantage of.
Yes, absolutely. Um, so Steve, this has been a great interview, but let's talk about, so now, eventually they closed the career channel down, right? And so basically that part of your industry shut down, and now you opened up Mid-South Financial Group. Let's talk about that transition and let's focus on what you're doing now.
Well, in 2011, I'll never forget it, Cole. In 2011, we were in Chattanooga. We was having an agency meeting. And of course, it was a Genworth career shop. And I still have the slides of that. And I put up, and I wanted to introduce the agents to our vision and where we wanted to go. This was in 2011. And I told the agents, we need to, we got to change or we're going to become dinosaurs. And I don't know why I did that, but I did. And so I went through my projections over the next 5 years, what I wanted to do. And I showed them on the graph here, basically long-term care sales, annuity sales, Medicare sales, and life. That was the fourth areas that we wanted to really focus on, not just traditional long-term care or just long-term care. And I'll never forget that. That was on a Friday. And as soon as I put that graph up showing this, the one bar graph was really high, was the annuity. But when you're talking about premium annuity, you're talking about a long-term care policy. Let's say back then was average $1,800 versus annuity $50,000. So the graphs don't match. But you could see the agents, their eyes just, like they was going to explode out of their head. They're like, Wilson's trying to make us all financial planners. He's trying to make us be something we're not, And that wasn't it at all. I was just trying to find a way to help us grow our business and grow and continue to stay in business. So anyways, the next day I had to come back in on Saturday morning. We met for Saturday, and I had to really go back through that, and because I knew the way it went over, I'd scared everybody to death. But that's really 2011 was when we really started making the transition. So when Genworth made the decision to shut everything down in 2015 on the retail side, it was really very easy for us to pivot. And our what we started focusing on, Cullen, because as a whole, our group of agents, we had in excess of 50-some thousand long-term care clients. We had books of business well over 50,000 people that had long-term care with us. And so what we started focusing on was those books of business, because you have to have some leads, you have to have prospects, or you're unemployed.
Yep.
And so we had prospects. We've already got people that's trust us enough to buy a product from us. So why not go back and work with them? So we built a system, a training system and a system, go back in and do policy reviews like we should have been doing all along, and we wasn't, to go back in and do policy reviews, and then also uncover other needs and concerns. And because life happens. So you go back in. These people, now the son and daughter-in-law are divorced. And you find out the son-in-law hadn't even changed his death beneficiary on his policy. So you're able to replace his life insurance policy. And just a lot of those things. Then you find out they're going on Medicare, or they just retired and they got a 401k sitting over there. There's so many things sitting there that they don't know what to do. They have no idea what to do.
Yeah, so you've developed some rapport, right, with the family because you initially provided them with long-term care insurance. Now you've expanded your practice, right? Basically, you are a financial advisor now. You've broadened your horizon a little bit. So now you can go back in and help them out with guaranteed lifetime income. Maybe there's some things that have changed, new family members, life insurance, other products that you can do, and it's already kind of a warm market, correct? Is that what you're saying?
That's correct.
That's incredible. That's great opportunity. So let me ask you this real quick, though, while I'm on the same point. Have you gone through that whole database of 50,000 people, or are you still continuing to work that?
No, we're still working it. And here's the thing: it's slow sometimes getting a lot of the agents to buy in, because we're all adverse to change, and it's learning. And the thing too with the long-term care, and I don't mean this in a, because I'm a salesperson at heart. I love selling. I love sales, and I love training sales. But what you learn first, you learn best. That's just the way it is. You learn what you learn first, you learn best. And so the agents, a long-term care specialist, they'll get in their mind that they know everything in the world about a long-term care policy. Well, a lot of times whether it's a Medicare supplement or Advantage or an annuity, they'll think if they don't know everything about that product, they can't sell it. they get that worrisome in their mind. But when you start asking questions, then we all realize, heck, I didn't know everything about long-term care, and I was able to sell it. So we're still learning things about things we did. But the key, we haven't touched all those folks. No, we haven't come close to it. We're constantly dripping on them, and trying to set appointments to do reviews and things. But Medicare, I'm telling you, the way we use it now is with Medicare.
Wow.
We because all these folks, my average client, my first 4 years in business, my average client was 68 years old. So you figure in 2000, my average client 68 years old. Well, here we are at 24. So you know how old they are. I mean, they got some age on them. So we're looking now at the Medicare, and the other thing we're looking at now and pushing more to is the children. And that's because that's really where the market's going now. And here's the thing that happens. One of the objections I get with working with children, or getting the agents to work with children, is this: well, Steve, the parents are so upset with what's happened on the rating credit. The client's upset, blah blah. They won't refer to their kids. Work with the ones that's going on claim first, because I'm telling you, they love you.
Oh yeah.
When they're on claim, I had another thing going back to when I started. One of my first claims. It wasn't my first one, but one of my first claims. I'll never forget it. I had this gentleman. He was in town to see his parents, and he wanted to meet with me. And I went in and meet with him and his sister, and his mom and dad were there. And his mom was on claim, and she was in pretty bad shape. She was going on claim, and they had lifetime policies, unlimited benefits, great coverage. And I said, and I could tell the way he acted. He was suspicious, and he was sort of, to be honest, he was just rude.
Yeah.
And so I went through everything, what the policy would do, what had already been approved, blah, blah, blah. And I get up to leave. I shake everybody's hands and I leave. I walk out to my car, and then I hear him holler for me. And he's coming down the sidewalk, and I turn around, and he comes up to me. And he sticks his hand out, shakes my hand, and thanks me. And he had tears, and this is no exaggerate, he had tears in his eyes. He told me, he said, Steve, I'm going to tell you something. If I had known my parents had bought this policy, I would have forced them to have canceled it.
Oh yeah.
Because I would never have believed it's doing what you said it would do, and it's doing what it is doing. He said, I never would have believed it had done it. He said, I would have forced. He said, so I'm thankful they never told me about this policy. So that helped me learn. That was an object. I started telling people that story because when their son or daughter told them to cancel it, I wanted them to be able to say, we're not doing it because here's why. Because because you gotta try to overcome every unseen objection plus the seen objections before they come up. And so
I mean, it's amazing when claims happens and then you're taking care of your clients,
yes.
the level of trust and how much they love you.
Oh yes.
Especially on the death benefit side. When I field a death benefit claim and, I help that family out or help that wife whose, husband just passed away. Next thing you know, you hand them a big check. You're their number one person they trust. The whole thing.
Because Colin, at the end of the day, we all have to live in denial or we couldn't get out of bed. They never thought they'd need long-term care. This is just in case.
Yeah.
And when the spouse dies, it's always sooner than they thought it was. I don't care if it's 92 years old. It's still younger than they thought they was going to die.
Sure.
It's never when they think it's going to happen.
Yeah.
And so that's what I'm saying. The difference we make in families' lives is enormous. I mean, it's enormous what we do.
When I was young in the business, and one of my mentors used to talk about, hey, we're saving lives out here.
Yes.
And he believed it, right? And I'm a young kid at the time, and I'm just going, I don't know if I buy that. Now later in my career, absolutely. I mean, it's amazing what we're able to do for clients. Dude, Steve, this has been an incredible interview. What I want to do is I want to wrap this up here, and there's all kinds of other things I'd like to talk to you about, but I realize that we're running out of time here. So currently you're running an agency that handles pretty much everything, right? Like you talked about, you're doing annuities, you're doing MedSup, you're doing long-term care, right? Mid-South Financial Group, you're the CEO. When did you start this company? Did I miss anything there? I mean, you're doing everything from.
Yeah, basically Mid-South Financial, we basically started about 2010, 2011 is when we did it. And, but, we basically spun off where we wasn't part of the Genworth is in 2015. But to touch on that, on the what we're doing on the annuity. I mean, like I said, we basically focus, and we do a lot of people younger, but for life insurance things. But our focus has been the senior market because I think that's the biggest thing now. Is we do a lot. I mean, we still do a lot of long-term care. We do a ton of Medicare, but retirement income planning is one of the biggest things we do now. Or safe money, ways to put some money aside, still get some good growth without any downside risk. And that is a big thing we do now because, like right now, Warren Buffett has over 285 billion in cash. He's selling everything because everything's high right now. He's getting out. Well, this is when everybody else is getting in, and so that's what. So everybody is triggered by fear or greed. So I tell you, I love being able to sit down and just watching people know they're creating a pension because the days of the pension's gone. 4%, 4% of companies out there offer pension plans. Unless you're with the federal government or the states, being a teacher, things like that, there is no pensions. So here's an East Tennessee analogy of what we try to do for people, just in a grand scheme of things.
Yep.
I remember as a kid what it was like on the first day of every month at my grandparents' house. I remember that. I remember sitting there in the living room with Papa, who was a World War II veteran, lost a leg in the war.
Yeah.
You know, and sitting there knowing on the first, here come his VA check, here come his Social Security check.
Yeah.
And I knew Mama knew her check was. This was the days before direct deposit. And Papa would look over at Mama and he'd say, "You think the mail's ran yet?" Probably has. He couldn't walk the mailbox far. He'd get in his car, drive to the mailbox, get the checks, come back to the house, walk in the house, and have the checks. They'd sign them. They'd get in the car. They'd go to the bank and direct. You know what? They was getting their paycheck for life. Yeah. And I tell you, so that's Mayberry. That's old Mayberry. And that's what I tell people. All I want to recreate for people is the same excitement for them on the first of every month that my mama and papa had. That they were going to get a paycheck for life. What's wrong with that? What's wrong with that?
There's nothing wrong with that. That's incredible, especially in these times. So Mid-South Financial Group. So you're currently hiring?
We're always hiring. Good people.
Always hiring. I mean, what I was hearing earlier was you bring guys in, you know, as long as they're hungry, they're excited. But it sounds to me like they've got a ton of opportunity and a warm market for them to work once they're trained, right? In your office. And so you're based in Johnson City, Tennessee.
That's correct.
But as far as, you know, agents, you have agents. I mean, do agents have to be local? Can you take agents from different states? I mean, we have agents in 12 different states.
12 different states. I'm licensed in 27 different states, and I'm not opposed to being licensed in 50 states. So that's no problem.
So, and then as far as service and clients, now with the advancements and everything else, I mean, you can service clients basically across the whole United States, correct?
That's correct.
That's correct. That's incredible. Steve, it's been great. I mean, we've been here for over an hour at this point. I'd like to, do some additional interviews with you down the road here and get more specific on what you're doing now. But what's the best way for a client to reach out to you that's interested in doing business with you, and then B, an agent that or somebody that's looking to come to work for you? I mean, will you hire existing agents, or do you only train and hire new agents?
No, we'll do existing. We'll do both.
You'll do.
Yeah. I mean, the existing, we want to make sure because their background, what the training they've had, because sometimes it's harder to untrain than it is just train you.
Right? Because they've developed a bunch of bad habits and they're not willing to lose those bad habits.
That's a lot of it.
Okay, so what's the best way for a client to get in touch with you? Just the contact information I'm leaving below, or
just 423-282-1019 is our office number, and you'll have the email address and everything. Either way, just call or email. It's the easiest way to get a hold of us.
Perfect. And then the same thing for a potential agent that wants to come to work for you.
Same way.
Awesome. Well, my nickname for you, Big Dog. I really appreciate this interview, my man. We'll be in touch. And I thank you so very much.
Thank you, Colin. Appreciate it, buddy.
Talk to you, buddy. Bye-bye.